So Hims and Hers is up massive on the last 3 months. This is the second time I've recorded this, as the first time my microphone wasn't plugged in, but I'm going to try and power through this. Hims and Hers has obviously done really well in the last 3 months, and it is continuing to rise with a lot of momentum behind it. On the enhanced buy and sell system, aka the MACD indicator here, we can see that we are in a long position with quite the rally. Furthermore, looking at the RSI, we can see that we are currently very much so overbought. I have Hims and Hers to actually be overvalued currently in my system. Despite this, I'm actually still relatively bullish on Hims and Hers, and I do think long term definitely it's always going to be a really good investment, just with the growth rate in which they can provide. It's absolutely outstanding, and their liquidity ratio is really good. So I am long-term bullish, despite the current intrinsic value saying that this stock is not a buy. We will get into my technical analysis later on in this video, where I will showcase this information for you. But for right now, let's just do a quick analysis of the chart. So here we can see obviously we are in a long position, and if we look at the moving averages, we are well above, which for me just tells me I don't really need to do an analysis of the chart, because you can see that this is doing exceptionally well. I did a video around about a month ago at the bottom of the peak at the start of the peak for Hims and Hers, before it actually opened into a long position. I did it about 3 weeks ago around about here, where I said we can expect it to maybe fall a bit further down, but I think this stock should bounce back really well, and that is exactly what it did. So I called that very well. Despite this, annoyingly, I didn't actually get into the stock. I told other people to get in, and they are now seeing great returns. But for me, I didn't get in, which is really frustrating. But I am now in. Eventually, I got in around the $33 mark. We can see that earnings is set to come out on the 24th of February, so keep that in your calendars if you are a keen watcher of Hims and Hers stock. Now, looking at what the analysts are saying on MSN for Hims and Hers, we can see a price target in the next 12 months being set at a high of $38 and a low of 18. 18, I think, is ridiculously harsh, and I also think 38 is pretty harsh as well. I think this next quarter is going to be a really good quarter for Hims and Hers, as it will be rounding off the fiscal year 24. Looking here on a basis of 13 analysts, we can see we are averaging out at a hold, with only 3 putting it at a strong buy, 1 and 1 at a sell, 6 at a hold, and 2 at a normal buy. So in my opinion, if you're looking to buy this stock long term, I think it's a buy. I think right now, as we'll get onto in a bit, we're kind of at the peak intrinsically, which is what I like to base off when I'm analyzing stocks. However, I do think momentum alone will carry the stock further and further up, as we can see on the MACD indicators, that we are just seeming to be powering on and on with this stock at the moment. Here, looking at its growth compared to its peers, we can see that they are set at 77, whilst the peer average is set at 3.82. So we can see that Hims, being its affordable telehealth company, is just outperforming every other stock in its competitive sphere. If we look to X, also known as Twitter, we can see that their CEO has a Twitter or X account. It really allows for Hims and Hers to reach a broader audience and connect with the CEO more. It just pushes out the image of the brand much further. Take, for example, Elon Musk or Anthony Noto on X. They are both very prominent figures, such even the likes of Alex Karp, Palantir's CEO. Having a very forward and public-facing CEO often does really well for these companies. Furthermore, we saw a fairly controversial Super Bowl ad saying that essentially all of the other big health companies are ripping off their consumers, whilst Hims and Hers is a cheap and reliable company. So it really allows consumers to almost connect with Hims and Hers, as it kind of says we're on your side in a way. So it did the stock extremely well over the last, 48 hours really. So looking here on the technical analysis, this is taking into account the past 5 quarters for this stock. We can see that the liquidity ratio is exceptional, with it being around the 20% mark on a mean. It is something to truly behold for a company which has been public since 2021. Just saw my green screen out, it kept going all fuzzy. But now looking at the retention rate, again, this is exceptional, with it being at 18.8% in the most recent quarter, with them taking into profit around the start of 2024-ish. We can see this company is doing exceptionally well, and according to the exponential trend lines, we can only expect this to keep on rising. Looking at the free cash flow, again, a really positive story, with it going from 19 all the way up to 79 in the most recent quarter. It just continues to grow quarter over quarter, and it does seem to be a relatively exponential growth. So now we're going to look at a 365-day exponential chart, and this is where the doubts start setting in for this stock. So we can see that price is climbing relatively well, and volume on a 365-day chart is also climbing really well. However, when we go over to a 90-day volume, we can see that the volume is actually decreasing whilst the price is only increasing. Of course, that's just on average. With the actual recent growth, we've seen that be relatively supported, but with the exponential trend line, we can see that volume is really a net negative, which isn't ideal. You would want to see that rising up with the price on a more one-to-one basis. This could mean that the stock doesn't have the fundamental support and could come falling back down at any point. So if you do have this stock, do put a stop loss in. I'm not saying it is going to fall back down, but there is potential for it to, as with any other stock. So what are the figures for Hims and Hers? Well, they have a PE ratio currently at 135, a 52-week high of $59 and a low of 9, this being a difference of 50, and the current price being set at 59, only a few cents off its peak, with the beta rate being set at 1.39. We can see here the growth figures. So I put in 20, the Analysts actually put in 12 point something, which I thought was quite outrageous. This also comes with a surprise rate from the Analysts on essentially how much they're shocked by the actual profit which comes in. So we can see in the recent quarters, we've had it ranging from 42% surprise to 90%. This is priced into my analysis. So what can we see for the intrinsic growth for Hims and Hers? Well, on the left bullish chart, we can see the intrinsic value is set at $30 and the acceptable buy price is at 22.5, with the margin of safety at 25%. This is pricing this in at a current sell, which is not looking to be a good sign for this stock. And it only gets worse as we move over to the more bearish formula. We can see the IV is set at 16 and the ABP is set at 12.1. This essentially meaning this stock seems to be overvalued in the next 12 months, considering growth is 33.86%, which it could definitely be more than that, and I am expecting it to be more. So we will play with these numbers, but the IV mean currently is set at 23 and the APB is set at 17. So now if I move the growth rate up to 50% whilst keeping the surprise rate, we get a surprise rate plus growth rate of 84.66. This gives us on the left an acceptable buy price of $52, with the price being set at 59 and the IV being set at 70. This actually says that this stock is fairly relatively undervalued at the moment. Not really, I would say more fairly valued. On the right here we can see the opposite, of course, which shows us we have an intrinsic value set at $36 and an APB at 27, which is obviously saying the stock is overvalued. If we look in the middle of these on the mean, we can see the IV is 53 and the ABP is set at 39. So I think it's fair to say this stock is currently somewhat relatively fairly to overvalued as the price is currently set. But that doesn't mean to say that we won't see more growth in this stock, as for the likes of Palantir, we can see that intrinsically is massively below where we currently are. However, the stock is just increasing week after week, quarter after quarter. So we could see the rally continue for Hims and Hers. I'm not saying this is the end. I'm just saying intrinsically, this could be the end of the rally for current growth. But that doesn't mean to say investors won't be pricing in more future growth, as we will get onto in a minute with the discounted free cash flow analysis. And very quickly, Peter Lynch's value gives us a result of 0.62, which tells us this stock is overvalued currently. When this says overvalued, I actually put it relatively close to fairly valued because it's such a bearish formula. So this just reaffirms for me that this stock is fairly to closely to somewhat overvalued at the moment. So now looking at the discounted free cash flow with a growth rate set at 25 plus the surprise rate, we get a normalized growth rate of 42.33%, with the current average growth being set at -12 because obviously they weren't in profit till around late 2023 to early 2024. We can see that we get a discounted free cash flow price per share within the next 9 years of $315. So long term, there is much growth still yet to come for this stock. How early this will be priced in will be down to investors to decide. Currently, it looks to be it might be sooner rather than later, which I'm not saying is a bad thing for me personally. With being a bit of a momentum trader, that's quite a nice thing. So we can see here that long term, this stock should do perfectly fine. So when we import hims and hers into my system here, we can see that I am putting this at quite a strong buy at the moment, despite us being at the top end of this intrinsic value. This was actually set about 3 weeks ago, that intrinsic value, and I'm going to keep that one there. But for the discounted free cash flow analysis, once I've added this in, we can still see that this is a relatively fair buy. And when you compare it to the likes of AMD, we can see that you are getting a much greater deal currently with the price of this stock in comparison to something which has a very similar intrinsic value, yet a worse discounted free cash flow. Hims and hers for me is just a stock in which I want to be more bullish on, and that's exactly what I'm going to do. So what can we actually expect in the next few months with this stock? Well, with the earnings report coming out, it will be a volatile time for sure. But there is a lot of momentum behind this stock currently, and it is something in which somewhat feels justified. We will find out in that earnings report, of course. But should this be a sustainable growth, which by looking at the chart, it does seem to be somewhat sustainable, I think we can see the price just continue to increase as investors are obviously pricing in a lot of growth for the long-term future. But I don't think it's out of the question to say at all that a pullback is expected, as we saw with the volume not quite keeping up with the price. It could prove that this isn't as supported as investors may have originally thought. So if you are holding this stock, it's definitely something to keep updating your stop losses on, as that is what I do personally. I think you're going to see great return on this stock, both long term and short term. However, mid term could be a bit choppy within the next year, as we are now high on this valuation and earnings reports are set to come out. Obviously, it will be very much down to how well they beat estimates on their earning reports and, of course, their outlooks. So I hope you have enjoyed this video. That is going to end it off. If you have found this useful or enjoyed it, please do hit that like button down below. Also, be sure to hit that subscribe button to stay in the loop of what investment strategies you should be adopting in 2025 and what stocks look to have high growth. So with that being said, I will see you for the next one.